Just recently, Charlie Munger added to his position of Alibaba. In this video, we will try to calculate the average price of his position. Then we will look at the main risks investing in Alibaba, why the stock is down so much, and then we will try to come up with a fair value of Alibaba stock. So let's get started. First of all, if you like this type of content, please subscribe. You'll be notified when the new content will be ready. It's absolutely free. According to 13Fs from Daily Journal Corporation, Charlie Munger added in first quarter of 2021, in third quarter, and in the fourth quarter. I have calculated that his average minimum price is 149. So what I did was I took the minimum price in each quarter, and as a result I get 149. I believe Charlie Munger is so good that he was able to buy at the minimum price in the quarter. It is very likely that his average price is much higher, but we will assume that he was able to buy it at the lowest price. So his minimum average price is 149. Alibaba is down from 317 to 110. So right now it is trading around 125. So you are able to buy at the much lower price that Charlie Munger did. Okay, now we're gonna look at the main risks investing in Alibaba. Okay, first of all, US regulators recently announced that they want Chinese companies to open up their books. And if they don't do this, the Chinese companies may be delisted. So I believe this scenario is very unlikely, but as investors, we should be prepared for every scenario. What I did was I checked with my broker if I was able to buy Alibaba on the Hong Kong Stock Exchange. The answer was yes, but there were additional commission. First of all, there is a stamp duty, which is around 0.13%. Then there is additional commission on conversion to Hong Kong dollars. Also, because it is not a US stock, the commission on stock purchase will also be larger, but it is possible to buy Alibaba from the Hong Kong Stock Exchange. If you buy Alibaba ticker 9988 on Hong Kong Stock Exchange, you will not have the risk of delisting. That is something to check with your broker. So I believe international brokers have the ability to buy Alibaba from Hong Kong Stock Exchange. But it's something that you definitely want to check with your broker. Also, I've asked the question, what happens if the Alibaba ticker BABA will be delisted? Will this stock will be converted to 9988 on Hong Kong Stock Exchange? But this situation was very unique. The broker didn't give me an answer. So that is something you should also check with your brokers. It's very dependent on your broker. Okay, the second risk is the VIE structure. The issue is that we do not own the shares of Alibaba directly. We own them through the shell company on the Cayman Islands. And this company in turn has the ownership of future profits of Alibaba. In theory, Chinese regulators can make this scheme illegal. Recently, Chinese regulators were asked what is their attitude towards VIE structure. And basically what they said is if the company complies with domestic laws, they're okay with that. So this is from their official side. Though this attitude may change, this is very unlikely. The third risk is competition from companies like JD.com or Pinduoduo. Technology is changing pretty fast. As a result, the profit margins of Alibaba can be significantly reduced and the growth will be much lower than it is projected. So that is the third risk. Okay, the fourth risk is pressure from the regulators. For example, nationalizing for-profit tutoring and erasing about $100 billion of market cap. After Didi went public, its app was banned from the app stores due to cybersecurity issues, suspending WeChat from registering new users, limiting gaming for children under the age of 18 for only 3 hours a week, and of course the Common Prosperity Fund, in which Alibaba and Tencent donated $15 billion each. I believe the main issue here is that Western world and China has different value systems. For example, Western world has values centered around individual, so it's a bottom-up approach. On the other hand, China has values centered around family and country, common prosperity, so it has a top-down approach. So the future prosperity of China is the most important thing, and investors, individuals, comes second. On the first glance, this seems like a scary thought for an investor in Alibaba, but I believe this is actually a good thing, because China prosperity is very dependent on access to financial markets and access to technology. Technology and access to financial markets are essential for the future development of China. And Chinese governments know history very well, and they know that the isolation isn't an option. So I believe that in the end, Chinese regulators will show who's the boss here. They will take their pound of flesh, like Monish Pabrai is saying about Alibaba. So I believe in the long run, everything will be just fine. I believe that if we are investing in Alibaba, we should accept the risks, because the risk is there. But I believe the risk is already in the price. It is very likely that everything will be just fine in Alibaba, but in the worst case scenario, I believe it's reasonable to limiting our position to 10 to 15% in Chinese stocks. Okay, now let's try to come up with the fair value of Alibaba stock. First, we will need the growth. The average book value per share growth of Alibaba stock was more than 30% in the last 10 years. The average cash flow per share was also close to 30%. The previous revenue growth was 29%. Management in their guidance are expecting more than 20% growth. To be on conservative side, let's use the growth of 15%, which I believe is in the low end. Then we need the future price to earnings. We will take the current price to earnings of around 17. This is very conservative because the average 5 years price to earnings of Alibaba is more than 30. We will take the required rate of return of 10%. After adjusting for net debt, we get the fair value of Alibaba stock of $212 per share. Also, I believe this is extremely conservative because we use the growth of only around 15% and we use the price to earnings of only 17. The average was more than 30. So 212 is the very conservative price of Alibaba. A lot of analysts are projecting the fair value of more than $300 per share. Okay, I believe that if we decide to invest in Alibaba, the main thing that we should focus on is the risks, because I believe in the long run, Alibaba will be just fine. But we have to be prepared for the worst case scenario. First, we should know what happens if, for example, Alibaba stock will be delisted. So that is something to check with our brokers. Will the shares will be automatically converted to the Hong Kong Stock Exchange? Also, I'm limiting my position no more than 10 to 15% of the overall portfolio. I believe that Alibaba is a great opportunity that not comes very often. But if we decide to invest in Alibaba, we should accept that there is a significant risk. If you like this type of content, please subscribe by pressing this button. Also, if you want to know how I used the discounted earnings per share method, here's the video. There is a step-by-step tutorial how to make this type of calculation. Thank you very much for watching till the end, and see you in the next video.